People are wrong about dividend stocks, and here's why. If I had to build wealth with stocks using one simple filter, I would not start with hype, whatever the press says. I would start with companies that have paid shareholders through recessions, through inflation spikes, crashes, rates going through the roof, not because dividends are magic, but because they usually tell us something very important about a business. And let me interrupt this with a fact most people never hear. Did you know that nearly 60 years of market data shows that high dividend stocks don't just beat low dividend stocks, they even beat the full market over that stretch. And that's not a blog post, that's not social media, that's academic research, because researchers looked at the top 1,500 US stocks by market cap from the years 1963 through 2021, and they split them in half. They said the higher dividend and the lower dividend. So then they tracked the total compound returns over that entire period, and the result was not subtle. The high dividend group didn't just do better, but that gap was massive. On the chart, $1 invested in the high dividend group grew to roughly 10 times what the low dividend group produced. I'm talking 10 times. So when somebody says dividend stocks are boring, my response to them is pretty simple. It's boring compared to what? Losing money? Alex, I'll take money. Boring money is better than losing money with excitement for 500 bucks. Now, here's the part that really matters. The researchers were not saying dividends are magic. Their conclusion was that the outperformance came from the type of companies that tend to pay dividends, which are high quality, profitable, stable, and defensive businesses. And my response to that is exactly, that's the whole point. If dividend-paying companies tend to be the kinds of businesses with stronger discipline, stronger cash flow, and stronger durability, why on earth would you ignore that? That is why I use stocks first, in these types of stocks, dividend stocks, first in my infinity investing framework, because I'm not chasing excitement or hype. I'm building a cash flow machine. If you hear these monkeys all yammering about the 4% rule, you might want to ask them why on earth they would buy something with the expectation that they're going to be forced to sell it at whatever time in the future that they need the money. In other words, you might be forced to sell at a bad time. Ask anyone who retired in 2000 or 2008 how that worked out for him. It sucked. So after working with tens of thousands of investors, I've come to the conclusion that being forced to sell something is not what you want to do. I want to live off the income my investments produce. Dividends, option premiums, rents, royalties, interest, it does not matter to me so long as I am not forced to eat the golden goose. I just want the eggs the golden goose lays. And that's the real difference between how most people invest and how I think investors should invest. Most people are taught to choose, to go after appreciation. It's got to go up. And then I'll worry about income later. So they build portfolios that look great on paper. But when the time comes to actually live on that money, they run into a problem. They have to sell it. They have to kill the golden goose. And I do not like that model. I do not want to build a pile of assets and then slowly liquidate it just to fund my lifestyle. I do not like that. I want assets that kick off cash. I want that pile to continue to get bigger. I want to get paid while I still own it. I want income without having to dismantle the machine. And that's why dividend stocks matter. Now let me be clear. The truth about dividend stocks nobody tells you is this. The dividend itself is not the magic. The business behind the dividend is what matters. A dividend does not make a bad company good, and a high yield does not make a stock safe. In fact, that's where a lot of people get hurt. They hear dividend investing and immediately start looking for the highest yield they can find. That is not a strategy, that is yield chasing. And yield chasing is how investors walk straight into trouble. If you see some stock paying a giant yield, your first question should not be, how much income can I get? The first question should be, what's broken with this? Because the market usually does not hand out huge yields for free. There is a price to pay. Sometimes the stock price is collapsed. Sometimes the payout is not sustainable. They don't have free cash flow. Sometimes the business is weak and the yield is the bait. They're trying to lure in investors, and that is not what I want. Inside Infinity Investing, dividend is one filter. It's not the whole filter. I want quality. I want durable revenue. I want strong businesses that people still need in bad markets. I want discipline in management. I want a reasonable valuation. I want trend confirmation. I want intelligent entry points. In fact, we use 7 criteria on any stock. Dividend is only one of those criteria, and we're not even looking at the highest yield. Only that it's been at least 2% and that it's been sustainable, usually 10 years at a minimum. And if I'm layering options on top, I want the option market to make sense too. So I'm not just buying dividend stocks, I'm buying quality companies that happen to pay me while I own them. And that's a huge difference. And that is why I start with stocks first. Not real estate first, stocks first. Now, I love real estate. Real estate is my second engine, but I start with stocks. It gives you leverage. Real estate gives you leverage. It gives you tax advantages. It gives you depreciation, and it can create tremendous cash flow if you buy well and manage it correctly. But real estate is more operational, and it's less liquid than stocks. It takes more involvement, and it's more dangerous. There's risk. Just ask anyone who bought a home and had to immediately put a new roof on it. It can be a real hammer. Stocks are cleaner. They're liquid. They're easier to diversify. They're easier to automate. And if you build the right portfolio, they can create a growing stream of income without you getting a midnight call about a leaking roof or a clogged toilet. And that is why stocks are first for me. Real estate is second. And then after that, I like managed portfolios, managed ETFs, areas where I'm allocating capital to experienced operators or systems that are designed to produce returns without me having to run everything personal. And then I keep a reserve, about 10% in cash. Some people, I say cash or cash equivalent, so gold, silver, Bitcoin, similar assets. Why do I do that? Because markets change, opportunities show up, and volatility creates openings. And I always want some dry power, some flexibility, and some ballast. And that's the structure. Stocks first, real estate second, managed strategies after that, and reserve on the side. And that is how I think about building a real financial life, not just a portfolio, it's a system. And the stock portion of that system needs to do something very important. It needs to throw off cash. And that's why dividend growth investing fits so well. Not because I'm trying to impress people with returns on paper. I think of it like this. If you said, I had a simple portfolio you could buy for some fixed amount, say $1 million, but that portfolio allows you to retire and never work again. Do you really care if that portfolio goes up or down by 40% if that income is the same? My care is that it allows you to retire and never work again. The value is somewhat of a distraction. It's certainly not the focal point. When I invest, I want my portfolio to start doing part of the work for me. The best version of this is not just stocks that pays you today. It's a stock that pays you today and has the ability to pay you more tomorrow, and that's the part people miss. When you own a company that can consistently increase its dividends, we're talking about the Aristocats, the Kings, all these companies that have been paying out 25, 50 years, you're not just buying the current income. You're also buying future cash flow that keeps going up. Inflation-protected cash flow. And that's how a portfolio becomes an engine that kicks off cash. Just ask Warren Buffett. He did not become arguably the best investor in the world by rapidly buying and selling. He became arguably the greatest investor of all time, holding his investments and having them kick off so much cash that his biggest worry is what opportunities to take advantage of with all that cash. Now layer in reinvestment while you're building, layer in proper account placement, layer in your tax awareness, and now you have something even more powerful because the return is not what you make, it's what you keep. That is why structure matters. The chart shows that the markets deliver, but the system determines what you actually keep after taxes, after mistakes, and after bad decisions. And this is also why I do not isolate one asset class and pretend it's the whole answer. Stocks are just the first engine. Real estate is the second engine. Managed strategies are the third engine, and reserves give me stability and and having options. Put those together, and now I'm not depending on one thing. I am building multiple streams of cash flow that can support each other, and that is real wealth. Hang on into the end, and I'll show you how to get a free copy of Infinity Investing. That's my Amazon best-selling and gold medal award-winning book. Yes, free. Hang tight for a second. I was talking about building multiple streams of income. And that is where I think a lot of investors go wrong. They skip the core and jump straight into complexity. They chase growth rather than value, appreciation instead of income. And they chase alternatives before they build up a stock portfolio that already produces reliable income. They buy complicated. They buy things that are difficult and complicated because it feels sophisticated, and it's not. Simple, using simple things that are done well will beat complex things done badly every single time, right? A portfolio of high quality businesses that pay you consistently, it's not flashy, but believe me, it works. And if you build that first, that income producing stock portfolio, then add real estate, then add managed opportunities while keeping reserves on the side, you're doing something most people never do. You're building a repeatable system. And that's what Infinity Investing is really about. It's not just buying stocks, it's building a framework that creates income, protects capital, and gives you more choices over time. So when people ask me why I like dividend stocks, the answer is simple. I like getting paid. I like owning businesses that give me cash. I like building income without having to sell it off in the future. I don't want to have to sell off my portfolio under some weird rule. I like using stocks as my first and cleanest engine in a much bigger wealth plan. And that is the truth about dividend stocks that nobody tells you. They're not exciting because they're not flashy. They are exciting because used correctly, they can become the foundation of a life where your money works harder than you do. If you still know somebody that is chasing hot stocks, they're hoping appreciation is going to save them, share this video with them. And drop a comment below and tell me what stock, what sectors, what type of companies you think belongs in a real cash flow portfolio that is producing income. Better yet, give me some of those, your favorite ETFs that produce consistent cash flow. And if you're not subscribed to this channel yet, subscribe now. I put new videos out every week on investing, tax strategy, asset protection, and legal moves that help you keep more of what you build. And before you go, I have two free things for you. First, the free Infinity Investing book. I said I'll send you a link. You can download the ebook for absolutely free. Just type free book in the comments and I'll send you a link to download it. Second, building wealth is the first part of the equation, but preserving and protecting it is the second. If you want to learn about tax and asset protection planning, we at Anderson teach a free class just about every Saturday on tax and asset protection. We've been doing this for close to 30 years, and you can join us for the day as my guest. I will put the link in the show notes. It's absolutely free. And then, just to help you out here, I'll put another video that you're going to want to watch that went viral as well. Go ahead and check that out. God bless.